Good Monday. Good Monday morning. Lots to talk about. We're going into the open today. Hong Kong, Shanghai, and Shenzhen just under 30 minutes away. You're watching the China Show. I'm David Ingles. Let's get to your top stories today. The dollar and U.S. futures are weakening. That's after Moody's rating strips the U.S. government of its top credit rating over its ballooning debts. We have HSBC's global head of fixed income research joining us in a few minutes to talk us through those stories and the implications of such. Now, the impact of U.S. tariffs could go up in China, could show up at least here in China's activity numbers coming through this hour for April, this morning at least here, before both sides, of course, reaching that temporary agreement to reduce those levies. Now, we're live from Taipei at Asia's biggest tech show, Computext, featuring industry leaders, including NVIDIA's Jen-Hsun Huang. Plus, we hear exclusively from Chinese auto players Zhejiang Leapmotor and EHang amid, of course, this tariff uncertainty. We'll hear about a business and also be speaking with the CEO of Hero Esports for Asia's first international multi-title tournament taking place this week in Shanghai. Good morning and welcome to the show. So we were jolted into the weekend as that big announcement came towards the latter part of the U.S. session. And then obviously we got out of bed this morning, up and running to the downside across U.S. assets. And we're now pushing 1% to the downside on the NASDAQ futures. On the U.S. Treasury curve, it's really on the long end where you are seeing the most pronounced reaction. And as you can see, 497, 5% is the next level to watch. Beyond that, 511 perhaps is that level we hit back in 2023. Beyond that, 511 is a level we last saw prior to that back in 2007. Right, let's flip the page, please, and have a look at where we are across the region here. So you have Asia coming, there we go, just about flat. You have Taiwan coming online, half of 1% to the downside. Nikkei's bottom of your screen. So broadly, risk aversion, not a lot. It's going to take us really take time to get warmed up. Of course, as far as data goes today, the big one is, well, in the next 27 minutes, home prices out of China. In the next hour, activity numbers for the month of April. And we'll see how that played out. Of course, I guess in some ways backward looking, given, of course, that was the full month of following Liberation Day announcement, but before, of course, this sort of de-escalation that's taken place in the last two weeks or so. Right, let's please have a look at where we are, A50 futures also. And there we go. Thank you so much. So we are slightly to the upside. China 10-year yield 168. So you do that with a 30-year. Are we poised for a flattening at some point along those lines? Dollar China 720.55, which effectively puts us extremely close to the low of 2025, and that could obviously happen depending on what the data looks like, or before that, actually. We'll see what the fix looks like coming out of the PBOC. The first one of the week should be out in about 12 minutes from now. Right, that takes us into the agenda for today, and so we have activity numbers coming through. We talked about the data. We talked about the lows, perhaps, on dollar China. We have a lot of earnings coming through in the form of, I think it's Alibaba Health, CLP, and I think it's Leapmotor that's coming out with earnings today. So keep an eye on that. We are in the window for FDI numbers coming through. And also, on Friday, in case you missed that, fairly relevant given the market reaction already we saw in the U.S. session to shares of ZTO, which were up double digits. So some changes to the benchmarks here in Hong Kong. Hang Seng goes from 83 to 85 in terms of the number of members, and you have two being added to the benchmark. Those two, you have BYD being added to HS Tech, and to make way for BYD's China Lit being removed from HS Tech. So watch out for any potential or likely reaction as far as those are concerned. Right, okay, let's talk about the other big story, of course, still the stripping of AAA coming out of Moody's. You had the Treasury Secretary Scott Bessent downplaying concerns over Washington's government debts, and certainly comes after the U.S. credit score was lowered to AA1 from AAA on Friday, joining its peers Fitch. And of course, years and years back, you had S&P, of course, coming through with that. Speaking to NBC, Bessent called Moody's a lagging indicator of U.S. fiscal health.
We didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years. We inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy.
And as we were pointing out, really the downgrade is weighing on U.S. assets. Broadly speaking, risk assets, you look at the dollar, you look at where treasuries are moving right now, look at U.S. futures. I think the dollar is still down against every single one of its G10 peers as I speak. Mary Nicola is with us right now to talk us through this out of our MLive team. Mary, where is your head at the moment looking at what happened on Friday and certainly the continued reaction we're seeing Monday morning?
Yeah, I think as Scott Besson pointed out, it's more about, it's not that they downgraded and we know that it's a lagging indicator, but it's more about the fact that the policy uncertainty still lingers. Last week we were talking about tariffs and the tariff and potential tariff reprieve between the U.S. and China. And now this week, as we kick off the week, it's more about the budget concerns. Now, but the budget bill has been in talks for some time that the House is discussing, and they're expected to bring this one big, beautiful bill to discussion by the end of May. However, one of the key things is that in the run-up to the discussion, it seems that more of the focus is on tax cuts than spending restraint. So, of course, that brings out a lot of concern about how wide is this fiscal deficit going to be, what is the potential ramifications, and, of course, calling into question about the debt sustainability of the U.S. And that is what is putting a lot of these risk assets under pressure.
And Mary, how does that set up the week for us, really, in a sense that, I mean, to your point, dollar's been on the back foot. That's really given, I guess, a platform for EM assets. Are we expecting the same this week? Any consequential, perhaps, development coming through, depending on what the China numbers look like today as well?
Yeah, I think one of the big things, especially out of this Moody's downgrade, and especially the focus on the fiscal budget, is that, you know, we're within reach of the S&P 500 reaching its all-time high. That momentum is going to be questioned. So this sell America trade is going to come back to haunt U.S. stocks, U.S. treasuries, and of course the dollar as well. And then of course you have the G7 meetings coming up, and so there's a lot of discussion about whether FX is on the table. We already know that it has been flagged by the Japanese finance minister that it will be discussed. So of course there's going to be a lot of discussion in terms of, you know, we have already seen an advancement of the Taiwan dollar. So what does that mean for the rest of Asian currencies? Because does that become part of the trade deals? And so I think a lot of what you'll see is, especially if you see dollar downside, that reignites the Asia focus and Asia currencies in particular, that they can see further gains as a result. And then of course we have the China trade data, that's the China data dump that's coming out today. And of course, yes, it may be backward looking, but it still doesn't show any signs that there is going to be a resurgence, because we look at container ships and the way the ships have been moving from, there hasn't been that resurgence that you would expect even with the reprieve.
Mary, thank you so much for setting up the day and the week for us. Mary Nicola in Singapore for us. Let's bring in Stephen Major, Global Head of Fixed Income Research at HSBC, who was just glancing right now at the shape of the U.S. curve there. The long end's not liking this one, Steve.
No, well, 5% is within reach.
Yeah.
And it does seem that it's the 30-year bond that's getting the most pain here. So 10-year yields are still lower than the high for the year.
Yeah.
And I think it's going to be a concern for the Treasury that we're getting to this level. But then again, who actually buys 30-year bonds? It's kind of a specialist niche, so that there might be insurance companies, pension funds, and then there'll be others who play the shape of the curve and are doing very well with the steepening between 10s and 30s and 5s and 30s. Right? Yeah. That's been a winning trade for the last few months, really. So the question is, what is the path to those yields going back down? And at the moment, you can't really see it, because we were thinking the data was cooling. And I think many asset managers, fixed income asset managers, equity asset managers, were positioned for a cooling, slowing economy, and were maybe caught out by the risk-on that came after the deal with China, or some kind of deal, or delay to tariffs. So the 30-year, I think, will be on everyone's mind this week. And I heard the U.S. Treasury Secretary talk about this, and he has been quoted as saying scary. so I haven't even got to put the words in your mouth, right?
Yeah.
So I think he's not wrong.
Yeah, well, yeah, not your words, to your point. Well, does the downgrade matter?
Well, it's a catch-up. It's not like 2011.
Where we had the first one, yeah.
Yeah, so, yeah, it just completes the set. The thing is, what else do you buy? Now, in the preamble to the show, we were just chatting. Look, you've got the best part of $30 trillion of marketable securities in U.S. Treasuries. It's 29, but going on 30. And I don't really see any other market that offers that kind of liquidity. But what you can do is think about a basket of alternatives. Now, what's happening here with the softening dollar should be good for emerging markets, the local rate markets. It should be good for bonds in Asia, for example. The issue here is that there isn't the yield. And look at the yield on China government bonds, for example. It's so far below the US equivalent. So we have to look at bonds versus swaps and yield curve shapes to get the value. On an outright basis, you have to go to countries like the UK to get additional yield over treasuries, for example. But you could build a basket of European, Asian, and Asian bonds, maybe some LATAM as well, to start to get a yield that's above the treasuries as an alternative.
Yeah, that's the tactical substitution that you've been outlining there as well. So on an outright basis, if you could specify then, what are the plays on outright? And if it's Asia EM, is that swaps? Am I hearing that correctly?
Look, I don't think US yields can go up that much from here.
Long end.
No, I think that we're going to flirt with this 5% level for the 30-year. But, you know, the 10-year is still comfortably below the high for the year. I think that the cooling economy should be consistent with lower yields. And then swaps are the better way to play the direction of lower policy rates in Asia. That's something we've highlighted recently.
Right. And in Europe, what the play there is that relative between what you see in the UK and
the UK is the best of the bunch, really. The yield is actually above treasuries, and I think that you don't have questions about independent central banks in Europe, for example. Now, part of the cheapening of the US Treasury market is down to the narrative around who's the next Fed chair. Is the central bank independent? What are they going to do? If what? You know? So there's fiscal, central bank independence. You don't really have the same set of concerns in Europe because you've got independent central banks and you've got some fiscal constraint. And in fact, it's a bit of a paradox, really. Countries like the UK have gone through these shocks on the fiscal side, and that limits what they can do now. The US seems to be flirting with that kind of narrative right now.
Right. Okay. So it seems, as the play now, is it sovereigns and rates? And do I need to be anywhere near credit at the moment?
At least the investment grade credit has had a bit of a correction. We're mildly bearish on the high yield, and I think that's consistent with the slowing economy and expectations of rising default. But investment grade has at least corrected. It's very difficult to be short credit because of the carry and the roll.
Right.
That's the problem. So our preference is to sit in the belly, and we tend to look at sector preferences in credit. So we favoured banks, for example, recently, and I think some of the more cyclical areas are more vulnerable in the second half of the year. But with credit, you have to be really patient, and it's difficult to be short credit duration.
Right. Now, the play in China is what, on the CGB curve?
Well, the long end is very steep, and this must be one of those consensus trades that people keep getting wrong, in that people try and equate bond supply in China, so increased issuance from government and local government, with a steeper curve. Okay. It doesn't seem to happen.
Yeah, why is that a mistake?
Well, it's because the bond yield ultimately reflects the longer run equilibrium policy rate. And that's proven just about everywhere. I know there's this narrative out there, there's more bonds coming, so the yield should go up. Yeah. That's not actually how it works. If there's more bonds coming because the fiscal policy is loose and the central bank revises the equilibrium rate higher, then yes, yield should be higher. And in China, that doesn't seem to be the case. I don't think we could argue that the equilibrium, longer run equilibrium, is going higher. It's been slowly going down through the last decade. So we think that there's an opportunity here to go against some of these steepening moves in the longer end of the China curve.
Okay, so that's a flattening bet right there. Final question for you: what do we avoid? What looks like a mistake?
Well,
anything?
It's always very difficult to find what the big risk trade is until afterwards, isn't it?
Yeah.
But I do think being diversified makes a lot of sense here. This isn't a cop-out, David. In all seriousness, who would have predicted the swings we've had in markets this year? Think about how the consensus was coming into 2025. In fact, we've seen many of the consensus trades completely get reversed. So again, it's having a spread, and in bonds, I think that the opportunity now to make these tactical substitutions out of treasuries into other markets. You can't sell the whole lot; the market is just too big. Right. But you can make these 1% incremental adjustments. You just think how much money 1% of the treasury market is. When you've got $30 trillion, you're talking about significant potential flows. So you're just looking at those opportunities to switch into some of the EM local rate markets and into the developed markets in Europe.
And ironically, I think the cause for concern around treasuries is because of how big it is. And now I think finding an alternative is difficult because of how big it is. Yeah. Ironically enough. Stephen Major, fantastic. Thank you so much. I'm out of HSBC, Global Head of Fixed Income Research there. Just in time for the renminbi midpoint of the day, 719.16 against the US dollar, 2%. Either side of that, of course, is the onshore playground. 720.88 is the estimate there. In about 14 minutes from now, we'll be getting, of course, the April home prices. In about 45, the April data dump is also coming through as well. Stay tuned for that. Futures are pointing slightly to the downside. We'll talk more about that in a moment. Plus, of course, some exclusive conversations around the EV space, exclusive ones with Zhejiang Leapmotor and EHang joining us from the BNP Paribas Global EV and Mobility Conference. But ahead of that, we'll be live, of course, out of Taipei for Asia's biggest electronics conference. Computext and NVIDIA CEO Jen-Hsun Huang is set to deliver a keynote speech over the next few hours or so. A preview of that, and of course the opening bell, 13 minutes away. You're watching The China Show. Good morning. Good morning and welcome back. You're watching The China Show. You have geopolitics and President Trump's tariffs are expected to be top of mind at Asia's biggest electronics conference. That's Computext, kicking off, of course, today. In Taiwan, the ongoing tensions, of course, are seen as upending the way that the world's most prominent tech firms, such as NVIDIA, for example, have traditionally done their business. Annabelle Jewelers, of course, is with us live from the conference in Taipei. Morning, Belle, and I hear it's slightly buzzing already. What's in the agenda today?
Yeah, I can tell you, just to set the scene here, it's very hot. I think that the temperature is supposed to be feeling around nearly 40 degrees today in the sun, 37 in the shade. So it's very, very hot here today. But also hot, of course, is this event. And we've got crowds that are starting to come in behind me, you can see here. So this is setting up for Jen-Hsun Huang's keynote. This event is at absolutely maximum capacity here, so there's going to be thousands of attendees that are coming to hear what Jen-Hsun Huang has to say about the future of AI, we can expect, also about their cutting-edge hardware as well, and how they see that continuing to play out. So some product announcements could be on the way. So that's really the focus of this event today. Broadly, though, this event really comes in the shadow, of course, of these rising tensions between the US and China. There's question marks. Yes, we're continuing to see that spend on AI infrastructure, but do we need less of it moving forward? So still that deep-seat question continuing to play out as well.
Yeah, and Belle, you managed to catch up with Jen-Hsun Huang ahead of the event today, and I think first part of the question is what did he have to say, and also I would imagine what's next after these the chip restrictions around, of course, their chip to China.
Yeah, we can kick off with that first part because Jen-Hsun Huang, he was already been here for a few days, so we're really following his movements around the city over the weekend. But Jen-Hsun Huang is here in Taiwan just very shortly after that trip to the Middle East, where there were these multi-billion-dollar deals that were signed to send chips and AI accelerators to the UAE and also to Saudi Arabia. Now, the question is, when you've got so much technology that's leaving the US, going into the Middle East, does that also raise the risk possibly of diversion and for chips making their way into China? I asked Jen-Hsun Huang about that. Here's what he told me.
Governments understand that diversion is not allowed, and there's no evidence of any AI chip diversion. Recognize our data center GPUs are massive. These are massive systems. The Grace Blackwell system is nearly 2 tons. And so you're not going to be putting that in your pocket or your backpack anytime soon. And so these systems are fairly easy to keep track of. But the important thing is that the countries and the companies that we sell to recognize that diversion is not allowed. And everybody would like to continue to buy NVIDIA technology. And so they're very well, they monitor themselves very carefully, and they're quite careful about that.
So really downplaying any concerns around diversion to China of that technology. I also actually asked Jen-Hsun Huang what would be next. What's the next chip for China after the H20 was banned for exports there just a couple of weeks ago? He said that they're still working on that. He said it's not going to come from the Hopper series because that can't be modified any further. But NVIDIA as a company really risks losing ground to Huawei as well in mainland China, given that it can't sell its more advanced technology. Now, I asked him about that as well. He said it is a real challenge for the company, but they're just going to continue to do their best there.
Rockstar coverage from Bell and the team there in the extremely hot and humid Taipei, and of course more coming through as well with the big speech coming through in the next few hours or so. Going into the open today, it's the opposite of hot and humid. Well, it is hot and humid. Markets are the opposite. The 0.8% declines going into the pre-markets today here in Hong Kong. Plenty more ahead. Right. The story across these markets is pressure on risk assets, including U.S. Treasuries, including specifically the long end of the curve here. As you can see, we're looking at the down day going into the open here today. Under pressure still. The dollar's down against virtually all of its peers, certainly against most of its G10 peers as we speak. Your pre-markets, Hang Seng Tech, and some changes, by the way, to those benchmarks, which I'll tell you in a moment there. But as you can see, we're looking at a down day ahead of some key data coming through. And changes from 83, we go to 85 members on the Hang Seng Index. The top two on your screens are additions to that. BYD is being added to HS Tech, and China Litz is being taken off. So, yeah, that and the open are just ahead. Good morning to all our viewers joining us from across the Asia Pacific. Thanks for joining us and taking the time. Hope you all had a good and restful, and I guess in most cases, looking at the Asia Pacific, I guess a hot and humid weekend, looking at where the temperatures are going. Out of the United States, thank you for joining us and good evening to you. And certainly the story coming out of the U.S. on Friday is still what we're feeling going into the thick of things this Monday morning. Certainly the extension of the market, truncated market reaction following the Moody's announcement on Friday. And then going into today, so U.S. futures, U.S. dollar, U.S. bonds are under pressure. The long end, in fact, is now flirting with about 5%. We'll talk more about that in a moment. In a moment as well, including the open, we should be getting that's countdown. The April home prices coming through, and 30 minutes after that, we're on deck. We're on track to get an update on the economy as far as the activity numbers are concerned. Okay. While we certainly look at the open today, and while we wait for some of the numbers to come through and things to really get warmed up here, we are getting some lines coming through out of Xinhua from Chinese President Xi Jinping. We'll flash it on the screens a bit later on, but effectively we're looking at, some lines coming through here. It's unclear what the specific thesis is of this. Anyway, so I'll wait for more details on this, and we'll try and figure this one out. But all that being said, let's have a look at the open here in Hong Kong. And by the way, it's a down day across the Asia Pacific in the order of about 0.4%, and we are getting that as well coming through. Underperforming right now, Hong Kong markets. We did have some changes to the major benchmarks here. You have two being added to the Hang Seng. Hang Seng Tech, I believe, remains the same as far as constituent count is concerned, although you do have a sort of rejigging. One is out, one is coming in. I think June 9th, if I'm not mistaken, is the effective date. Anyway, I'll correct myself if I am slightly inaccurate in that one as well. Okay, let's wait. I'm just looking for. Do we have any more details yet? Let me just check my Bloomberg screens right now on the property numbers. Not just yet. Okay. All right. Let's talk more about what I just mentioned before I interrupted myself there very briefly. The quarterly review, the big week, of course, as far as CATL and other listings are concerned. And what else to watch here? Charlotte Yang is here with us to talk us through. Let's talk about the changes to the benchmarks.
Yeah, so Midea, this Chinese company that made lots of home appliances, electronics, they've been added to the Hang Seng Index along with ZTO Express, this Chinese company that is like one of the delivery company. And also we have BYD that's replacing China Literature in joining the Hang Seng Tech Index. So we're watching the moves for those stocks. And there's no change for the Hang Seng China Enterprises Index this time. Pop margin I made to it, even though despite the high expectations. So got to try harder there.
All the, I don't think, I can't remember the last time speculation was that rampant over a stock being supposedly being included. Okay, we're just getting some home price numbers coming through as well. Charlotte, just sit tight. So we have April new home prices out about 1/10%. Well, to be more specific, because the second decimal is certainly more important here as well. Negative 0.12%. That's month on month. That's a faster drop than the drop that we had in March, which was 0.008%, so slightly quicker tick to the downside there. Used home prices are actually also seeing a faster drop compared to March. We're looking at a negative 0.41%. That's also a month-on-month figure coming through there, and that should put us, and again, I'm going to correct myself if I get this one wrong, it should be about 23 months now of declines across home prices right now. Certainly, give or take about 2 years. On your screens are some of the developers to tell you about as well. Okay, we'll table that story for now. The other big news to tell you about this week is we now have confirmation from CATL on the pricing of the world's biggest listing that drops tomorrow. And what else can you tell us about CATL?
Such big moment for, I think, Hong Kong equity market, HKEX tomorrow. And I think and also, the HKEX, they're also introducing the monthly operations and also the warrants for the company the same day. And also investors will be allowed to short the stock as well. So I think for CATL, some analysts call the TSMC of batteries, the foundry to global transitioning. I think the demand for the deal, even though there's those geopolitical headwinds and also some of the exclusions for the U.S. investors still come out so strong. I think it shows that there are still that demand to own the stock, given the technology advancement and also what they mean if you have a global portfolio and you want to add one stock that's core to the green transitioning.
Okay, fantastic. Just the curtain raiser of the big week ahead we have for Chinese markets, including, as Charlotte was pointing out, the world's biggest listing drops this time tomorrow here in Hong Kong. Charlotte Yan, our Asia equities reporter. Just some movers to tell you about. So we talked about some of the changes to the benchmark. We are getting some moves there. On top of that, too, so CATL, we have confirmed, of course, they had confirmed that they're pricing at the top end of the range, bottom of your screens. The other one that actually did mention that their application for a listing is now being reviewed by the exchange is Foshan Haitian, listed onshore. No other details so far, but again, it just underscores the extremely busy year we've had for listings here. And of course, in terms of earnings coming through, you have Baba, Zhejiang Leapmotor, and also CLP are set to report results later today. Okay, let's have a look at where we are as far as, we talked about this, so I'll leave that there for now. Anyway, plenty more ahead. This is Bloomberg. Good morning. Welcome back. You're watching Bloomberg TV, the China show. Let's just pivot now to Tokyo very, very quickly here. So because we are getting some lines coming through, and BOJ's Uchida is speaking at Parliament, which we understand was going to happen anyway today. A couple of things that he's mentioned so far out of the deputy governor there at the central bank. The recent inflation is affected by cost push factors. Okay, they're stating a given context there. They'll be raising the interest rate if the economic outlook is realized. That's to be expected. I would imagine they wouldn't do Otherwise, uncertainties are extremely high. Again, to underscore the point out there, and they'll be examining the economic. Yeah, it seems to be a big nothing burger for now. Nothing much in the currency as well. Right. Let's talk about EVs and the outlook here for the sector with one specific company. You have EV maker Leapmotor is actually set to report results later today, at some point this week. The Stellantis-backed firm has almost doubled in terms of the share price, as you can see, give or take about 95%. And we have the perfect guest to tell us more about the company's strategy and the big picture. Joining us exclusively out of the BNP Paribas annual Global EV and Mobility Conference is Michael Wu, co-president of Zhejiang Leapmotor Technology. Michael, good morning, and thank you for taking the time to speak with us. So I know you guys are reporting results quite soon, so you can't get into the detail of things, but just give us a sense of how you think the company's performed so far this year.
Yes, good morning, David. Yes, Leapmotor has been performing as we planned in the beginning of the year. Everything is being executed on a steady pace. Our sales volume has been growing. In the first quarter, we delivered more than 87,000 vehicles, which is more than 100% from the previous quarter in 2024. And our sales network has been expanding according to our plan. Our service has been improving to satisfy our customers. Our international business is, being planned as according to our plan. So everything seems to be going according to the plan, despite there's a very fierce competition going on right now in the industry.
It is very fierce competition, and I want to get your thoughts on how quickly your innovation cycle is getting shorter and shorter. I just ask you as well, your chairman at the Shanghai Auto Show last month outlined the company's plans to build local production in Europe. I think Spain was brought up, Slovakia was the other consideration there. Is the company any closer to making a decision on that?
Yes, we're working on it. We believe pretty soon we should be able to have the final decision and final setup. Obviously we studied and considered together with our partner Stellantis to look at some of their existing facilities in Europe in multiple countries, where the factors being considered would include local supply chain, cost, overall government support policies and labor market, etc. So ultimately, we're going to work with the Stellantis to utilize their existing facilities to localize our productions in Europe.
Okay, and I want just to touch on the Malaysia side of the story too, because I understand that the company is planning to start production. I think it's the C10 in Malaysia this year. If you could give us an update there, and how big in terms of capacity is that plant?
The Malaysia production is also based on the Stellantis facilities. Also, the target is to localize our production in different regions. We just talked about Europe, but in other regions of the world, Asia, Pacific, South America, and other regions, ultimately at some point we will map out local production plan to better integrate with the local communities and local markets. For the Malaysia plan, we just started now. Hopefully by the end of the year, we'll get it to a more advanced stage. The initial capacity won't be that significant. It will be driven by the gradual pace of sales and market development. So we'll deploy the production accordingly.
There have been, Michael, just to get your reaction, there have been tightened restrictions and regulations around smart driving because of some, let's just call it, unfortunate incidents recently involving some in the industry. Has that in any way affected your plans and strategy?
No, David. Actually, that is a good reminder of the companies that safety is always important, and the autonomous driving technology has to be developed as such. But it will not alter fundamentally the strategy of our company or other companies' deployment. So what that means is we'll just have to continue to work on the technology development, keeping in mind all the different factors, right? Government regulation, safety, consumer reception and culture issues. So the whole autonomous driving is evolving, is nowhere near the end. So we're in the middle, we're on the road, we're in the process. So if we can keep that in mind, we know in the coming several years, we will work hard to develop further, and the industry will evolve along that line.
That's an important big picture reminder that, I mean, certainly we are still in the middle of this process, still in the beginning if you think about it, and we will get these sort of setbacks every now and then. I mean, just very short term, I understand that you will be giving the markets an upgrade of your C series cars. I think it's June or July. In terms of autonomous driving, what can we expect from that overhaul?
Yes, what we call the so-called annual facelift, our three major C models. C10 already announced May 15th. C16 will be June, C11 in July. But for C11, it will be mostly kind of intermediate upgrades. And also surrounding the autonomous driving, we'll deploy our so-called Leap 3.5 version of electronic architecture as a standard equipped for all the C series. So from there, we'll have the standard 800 voltage fast charging infrastructure in the car, as well as some other upgraded functions and features in the models.
Yeah, it's Michael, when you say upgraded, it's as someone who attempts to cover the developments in your sector, it's very difficult given everything that's changing at such a rapid pace. I mean, I know to some rough degree the company follows Moore's law, the doubling of capacity every 2 years, as I guess one of the, let's call it the benchmark for your innovation cycle, right? Something new every year and a half. Right. How do you guys do it? And do you think that shortened innovation cycle is also shortening the replacement cycle among consumers?
Yes. Okay. Leapmotor, we actually self-develop most of the key electronic components, e-motors, battery packs, and the electronic autonomous driving, and also the smart infotainment systems. All of this makes us the tier 1 suppliers to ourselves. So that allows us to upgrade and iterate models quicker and with more control over how we want to define the vehicles. So from this, we're among the most vertically integrated EV makers in the industry in China. So what this allowed us is to give us tremendous fast pace in rolling out models in different segments. And also it allows us to achieve very strong cost advantages because we are the tier 1 suppliers with respect to e-motors, battery packs, and electronics, key system in the car. So we have a much more streamlined development process, which saves us cost. So we continue to do that. Cost reduction, product innovation, and fast pace of innovation. And also another thing you probably remember, Leapmotor, the founding team came from electronics products 10 years ago.
That's right.
What that means is our team is much more familiar with the cycle of electronics, right? Cycles of mobile phones and those other electronic products. So we are much more adaptive in doing this. So that allowed us to achieve not only the fast product rollout, but also the volume growth, gaining market share in the fierce competitive environment, and also at the same time to improve our margins. For the past 6 or 8 quarters, we have steadily improved our gross margins as well as sales volume, gaining market share. So we have been demonstrating this unique capability. I think the market and investor community have started to notice our development in the recent time.
Yeah, I mean your shares are up 95% year to date, so I think that That's probably the case. Michael, we look forward to speaking with you again and hearing more details. And thank you, by the way, for spending the time. We know we have a presentation to do in a couple of minutes, or we'll let you go. Michael Wu, their co-president at Zhejiang Leapmotor Tech. And we'll have more certainly from our exclusive coverage there at the BNP event coming through here in the next few hours or so. Right, lots more coming up. And as you can see here on your screens, EHang will be joining us as CFO. Conor Yan will be joining us in the next hour of the show. And out of BNP, of course, Brian McCappin joins us as well at those times on your screens. Plenty more ahead. This is Bloomberg. Good morning. Welcome back to shows. Let's talk about Ukraine and the updates that we may be getting here quite soon. A source tells Bloomberg that Vladimir Putin believes he has a strong hand ahead of the phone call on Monday with President Trump, that this comes as Washington is pressing for a quick end to Russia's war in Ukraine. Let's bring in John Herskovits, our East Asia government editor, to talk us through the expectations we should have ahead of those talks. John.
Sure. So we have talks that are planned today between Trump and Putin. This is they had talks in February, and at that time, Ukraine and Europe were worried about what came out of those talks. Trump accepted a lot of Putin's demands for ending the war, put the onus on Ukraine, and made it seem like a deal would be a fait accompli without the input from Ukraine. So this is what's going on ahead of the talks. After the talks between Putin and Trump is supposed to speak with President Zelensky and then with European leaders. Zelensky over the weekend had talks with J.D. Vance, and he's also raised concern about a drone strike that happened just before the Trump talks with Putin. It was one of the largest drone strikes that Russia has launched against Ukraine since the war started. And Zelensky is saying that this shows that Putin is not interested in peace, and it just reaffirms his idea that what Putin is seeking is not what Ukraine is seeking. The maximalist demands that Putin wants are just beyond the reach of what Ukraine would agree to.
John, just to shift gears, there's this. What can we make of this report out of our colleagues here that China gave, and this is the Pakistan-India story, gave Pakistan satellite support during that recent conflict with India? What do we know exactly?
Sure. We've gotten some report from a think tank affiliated with India's defense ministry that China offered satellite support during the conflict with India, which helped Pakistan with configuring its radar, prepare air defenses. This is just a growing concern for India about the cooperation between China and Pakistan. During the conflict, Pakistan claims that it shot down some of India's jet fighters, which were supplied by France. This hasn't been confirmed yet by either side, but one thing it did do is raise expectations that China's weapons are better than build. The one fighter in question was China's J-10C fighter, which hadn't been battle tested before. And investors showed their support of this company by really boosting the shares of the maker of this jet fighter. So there was another weapons tested from China, missile system, and both of these have raised expectations that China's newest weapons may be better than expected because of the battle testing that they've gotten in the conflict between Pakistan and India.
John, thank you for the update. John Herskovits there, our East Asia government editor. Just a very brief look across these markets, 23 minutes into the cash market session here, and in a couple of minutes we'll be getting the April activity numbers coming through. Estimates on your screens in yellow. We're coming up the numbers on right. Just to tell you about, and as you look at markets to your left, the home price numbers, which came out about 20 minutes ago, also, I guess in some ways, underscore the continued support that is needed to turn the developer story around. So negative 0.41% month-on-month was the drop, and certainly the acceleration of the drop slightly from what we saw back in March. And again, this continued series of declines across home prices. I think it's 20-plus months now, really, going back, I think it's to June of 2023. We're looking at 51% to the downside on the CSI 300. And when you look at the Hong Kong numbers coming through as well, and I think on the good news here, Sun Hung Kai actually came out with some lines coming through on a separate story that some of their properties were sold. 376 flats were sold. Now, there's no specific context here whether or not that was they managed to sell that out as rates fell, but some context there and how lower rates is really helping things along as far as the Hong Kong property. There we go. Thank you so much. Property market is concerned. Right. Now, as we get the latest numbers coming through out of the Chinese economy, and we'll have a deep dive into the States and the outlook for China's economy, growth, consumption, inflation, and everything in between. A roundtable coming up with Goldman Sachs and Credit Agricole. Stay tuned for that. And the numbers coming through in just over 5 minutes from now. You're watching The China Show. Good morning. All right, good morning, and welcome back to watching The China Show. And yep, there we go. My co-anchor Yvonne Man is here.
Just in time for data dump.
Yeah, we've got to bring in the big guns here as we get into the fairly critical set of data numbers coming through.
Yeah, April is this is the time to assess how big that impact of tariffs had been on China. But obviously, a lot of that has been rolled back. So it is a bit dated, I guess you could say. But you could see what really would be at stake here. Maybe why both sides came to the table.
Yeah, retail sales, industrial production, fixed assets, investments, the jobless rate, property investment year to date are coming through in about 10 seconds or so. Live pictures coming through out of Beijing, where maybe some context will be coming through as well following the release of the numbers in a few seconds. And we did get, okay, we're out. And Yvonne, you want to start?
All right. Retail sales, this is the one that was a miss. So we're talking about 5.1% for year-on-year numbers here, and quite a slowdown, and also a miss from what the economists were expecting, about 5.8% for industrial production. That one also seeing some slowdown, but actually better than expected, Dave.
Yeah, industrial production, we're looking at that coming in at 6.1%. This is for April. Now you take the year-to-date numbers, so Jan to April, 6.4%. So better on the monthly number. Yeah. That's a yearly gauge. The jobless rate's also out, and a drop to 5.1%. The property investment, though, continues to remain wanting. In fact, we are looking at a slightly accelerated decline there in terms of the decline to negative 10.3%. on year-to-date property investment. And again, to underscore the other point we were making earlier on before the numbers broke, new home prices came out about 30 minutes back. New and used home prices month on month saw an acceleration in the drop there.
And we saw that in the lending data previously, right? Yeah. That when you talk about the amount of household borrowing, that basically has gone below average in some levels. And so certainly that doesn't bode well for the property sector overall. But then again, it's really about what the exports picture is going to look like now that we are under this 90-day reprieve. Are things going to look better for the next 90 days? Then what happens afterwards? Yeah, well, let's put that question right now to our team here, this roundtable that we have for you as well, to talk about these numbers and really the outlook for this economy, given the aberrations in the news flow, let's put it that way. Joining us here on set is Xiaojia, Chief China Economist at Credit Agricole, and Shan, Chief China Economist at Goldman Sachs. Let's play a head or tail. So who do you start with? No, why don't we start with you? Why don't we start with you, Shan? Your initial reaction to the numbers.
I think the industrial production beating expectations is consistent with exports beating expectations earlier this month. So the whole set of data seems to suggest that China's economy still very much driven by exports and industrial production, right? If you think about the year-to-date industrial production, 6% handle, GDP probably 5% handle, that means that the domestic demand is still on the softer side, whereas external demand and production and manufacturing competitiveness, that story continues.
Xiaojia, I want to ask your take. I mean, how long can these numbers stay, I guess you could say, resilient? And how do you expect things to change in terms of where tariff reductions could stay in place or be lower further or even higher? I mean, what's your projections now?
Yeah, I think with the latest slash of the U.S. and China tariffs, definitely there could be continued kind of relative strength driven by exports. We have seen some of the high-frequency data coming from shipping shows that there have been a very sharp rebound in terms of the Canadian booking as well as the freight prices to the U.S. routes. So this will continue to have this front-running tariffs come into play, which would in turn have lending support to the production side of the story. But if we look at retail sales, it was a miss. Of course, last year we had quite a steep rise in terms of base effect, but consumption continue, grow at a slower pace compared to production. I think that definitely continue to require more of the policy easing to support, especially in the consumption side.
Right. I think that's a question for both of you. Let me start with you this time. Any visibility, though, in terms of consumption over the next 3 months?
I think if we look at some of the data, I would say consumption has remained. We have not really seen a very significant shift in the consumption style so far. If we look at the latest Labor Day consumption data, seems to be still holding up okay. And if we look at the employment, it has actually had a slight drop to 5.1%. So, but going forward, after this initial front loading of shipment of exports, how much this would have an impact on employment and how this will continue to have an impact on the consumer sentiment, I'm not very optimistic. So that we have to see a little bit more policy easing coming through in order to stabilize such kind of domestic demand and expectations, and they feel more comfortable to consume.
Shan, you don't feel like we're going to get more stimulus, though, right?
We are getting the implementation of those easing announced in March, which is less exciting as we saw the news, and then there's just the implementation of a trade-in program and so on and so forth. We think there's incrementally toward the end of the year, especially when we get to Q4, last year's high base is going to make year-on-year growth very challenging, and that's the possibility where fiscal expansion could accelerate somewhat. So in terms of our forecast, we are expecting the full year policy easing slightly higher than what we predicted after the 2 sessions in March.
Right. And currently, what's your current forecast right now for the economy this year?
GDP growth, 4.6%.
4.6. And you guys just recently upgraded, right?
Yes.
Upside or downside risks to that number currently?
I think currently we look quite balanced. When I pulled down this 4.6% GDP growth, I had this assumption of the U.S. tariff would remain at a level of 50 or higher. Clearly, April, the tit-for tariff hikes was unlikely to be sustainable, and I think it will fall back. But if you look at the tariff plays, and if you look at how complex this U.S. and China trade deal could become, then tariffs are currently at around 40%. I think there could be some of the, is unlikely to be very smooth and easy negotiations between the two.
Upside or downside risk? Because you guys have also changed your forecast.
Yeah, we went a round trip, right?
a lot of your peers have too.
Yeah, started the year around 4.5, and now we're back 4.5. And in the middle, when the tariff rate was sky high, we did cut GDP forecast. I mean, it's from a domestic point of view, there could be some downside risk, precisely because if tariff rates are lower, then there's less urgency to ease. So there's room for property sector performing not as stable as we would have hoped. But externally, we'll see what happens with the tariffs. What the past month has shown us is Chinese manufacturing competitiveness and export resilience. So in that regard, in our forecast, we are penciling in Chinese exports to the U.S. will drop by a quarter to 30%, because indeed we do have a 30% tariff added on top of what we had at start of the year. So I think there's quite a few moving parts, but around 4.5 seems to be the right place right now.
Your inflation forecasts, though, Shan from Goldman, are below market consensus. Can you tell us why?
I think inflation is where China is in a very unique place. Usually when people think about for example, higher growth, that should correlate with a higher inflation.
Yeah.
That's true to some degree in China, but at the same time, when you have a growth pressure and the dynamic in China could push the government to produce more to get to that GDP target, which is more supply than demand, which is more deflationary. So you have two lines of story happening at the same time. Even if you have innovation like AI, that's deflationary in many industries. So whether you have a good story of innovation or hitting GDP target because of policy pushing, or whether you have a bad story where growth naturally slows more than expected, I think inflation is just going to be very challenging in China. That's why we have a below consensus forecast on the inflation.
And, the lack of inflation so far, is that necessarily a bad thing? What's your view on that?
I would say it would. I mean, when it comes to this kind of U.S. and China tariffs, and it could continue to impose more of the deflationary pressures. So on one hand, I think it underpins the expectations of what you have. But on the other hand, if you look at how people would decide to spend, and whether the companies would decide to put on more investment, whether there is urgency, and if we look at the debt levels, I would say this continued disinflationary pressures is probably not what Chinese policymakers really want, and that would help China. Because if you look at the real GDP, okay, so around 5% target. But if we look at the negative GDP deflators, nominal GDP is only 4%. If you look at wage growth, is only 2 to 3%, and that would have an impact on corporate earnings growth as well. So with this, outright negative readings in CPI and the PPI, it's very hard to conclude that it will be actually positive for the Chinese economy.
Okay, we'll have more with both in just a few moments. We'll leave you with a look at live pictures out of Beijing. Of course, you have Xiaojia and Shan joining us here at our Hong Kong set. National Bureau of Statistics, a briefing of the April economic numbers, and of course, we'll get you guys an update for more context as those lines come in even further.
Yep, and Bloomberg subscribers, you can continue watching on Live Go. You also find the big diary entries coming up today and later on this week, as well as some of the events you may have missed earlier. We got plenty more ahead. This is Bloomberg.
General trade in the past 4 months was up by 0.6%, accounting for 64%.
You're looking at live pictures out of Beijing. The National Bureau of Statistics is briefing on those April economic numbers. And of course, as just to recap, you're just joining the show right now. So retail sales did actually miss expectations, I should say. Also, when it comes to industrial production, though, those were actually better than expected as well, Dave.
Yeah. It's hard to just look at these numbers in a vacuum and just not zoom out big picture, right? Because, certainly there's the aberration from the news flow, the pulling back from the tariffs, how that's affecting exports. Is it affecting the exchange rate, for example? Well, let's put that exchange rate question and perhaps even more to our panel here on set. Still joining us here is Xiaojia, Chief China Economist at Credit Agricole, and Shan out of Goldman Sachs, Chief China Economist there. We keep hearing the exchange rate is not part of any negotiation, not just China and the U.S. We're hearing it from many, many sides. And while that's let's grant that that's true, a weaker counterpart, a weaker yuan in this case, probably risks the deals. And I guess the question I have for both of you is, can we assume China keeps this currency at least stable, if not stronger, until we get some agreement on the trade front?
Yeah, I think keeping the currency stable is what the policymakers would prefer. Certainly, it will also depend on where the dollar is going. If the dollar is moving significantly,
right.
USD CNY will face one way or another, some pressure. But I think if you look at the fundamentals of CNY, I always say USD CNY has two legs. There's a USD and there's a CNY, right?
Yeah.
So first of all, you need to know what the USD is doing. But the CNY part, if you look at the Chinese trade surpluses, Goods trade surplus last year almost $1 trillion, and year to date this year may even beat last year despite all the tariff concerns and higher trade barriers. Part of the reason is that Chinese imports in the whole process of self-reliance has been much weaker than exports. So if you look at the fundamentals, the currency is about the balance of payments. You look at China's balance of payments, it's really strong. So that is why we are forecasting in 12 months USD CNY going to 7.
7 at that level, though. I mean, would that start to hurt exports? Do you think? I mean, do you think policymakers would really allow the currency to appreciate to 7?
I think when you talk about China, even like a couple % change seems big, but in grand scheme of things, from 720 where we are now to 7 is less than 3% appreciation. When you think about how much cheaper Chinese products are compared to their global competitors, sometimes 30%, 40%, so on. So more importantly, if you look at on the trade-weighted basis, because dollar strengthened and USD CNY has been relatively stable, China is actually depreciating its currency across a basket of trading partners. So in that regard, I don't think that's a big concern that strengthening the currency vis-a-vis the dollar will hurt exports significantly.
Yeah, if I could ask my producers to bring up the basket, please, as well, so our viewers can see that. Xiaojia, if I could get you to chime in on the exchange rate. Where do you think the exchange rate goes? And what's it better? Is it the basket or is it the dollar China that's more relevant at this point?
I think our CNY forecast against US dollar will be 7.25. So which means we continue to see CNY to stay range bound. I think if we look at the fundamentals for the Chinese yuan, I think there is a continued play of the interest rate spread because if we look at the US dollar and US Treasury and CGB yield spread, it remains very elevated at 2.8% at this point. So that would continue to kind of wane people's investment appetite on the CNY. And if we look at the lately, the CNY and CNH, oftentimes we see, the CNH spot was actually holding higher than CNY. So it means that when we look at the likely continued lowering of the Chinese rates onshore, people still have a tendency for the US dollar demand. So I think that will continue to have a play into the US dollar CNY dynamics. And from the PBOC policymakers' perspective, I think for them to continue to maintain a relatively stable CNY really works for them in order to underpin the expectations and so for monetary policy easing and for FX policies.
Yeah, and Xiaojia, you mentioned economic forecasting in this world now. It seems like a roller coaster in some ways. Given how volatile the data might look in the next few weeks or months, how are you actually tracking exports, for example, now?
Yeah. Precisely, it's hard to do forecasting. So what we are doing now is nowcasting. What we do is we do collect daily and weekly high-frequency data on the vessel traffic and port throughput, and then build a model to figure out is there a way we can better track exports because forecasting, we've never been here before in terms of policy volatility, in terms of how Chinese exporters are dealing with shifting tariffs. So when we look at the nowcasting numbers, we're seeing May first couple of weeks exports slow down somewhat, which makes sense with very high tariff rates. But I think going forward, the next couple of weeks we might see some rebound because tariff rate did come down. We are seeing the shipping data that shipping fees are going up. That means there's more demand for the U.S.-China trading route.
Should trading partners excluding the U.S. expect to see more Chinese shipments? And is that going to be deflationary for those trading partners? Let me start with you.
If we look at the dynamics between the U.S. and China, I think as long as there is a differential in play in terms of the tariffs, and if you look at how the relative, dependence of the U.S. and China on each other, so this would definitely what happening between U.S. and China have a more broad spillover to the rest of the world. Say if U.S. tariffs on China maintain at a relatively higher level compared to other major economies, which we expect will be the case down the road, not just this year and for the years after, then we will see that some of the goods that are destined for U.S. would eventually have to, will take some kind of routes through other places. And so during this particular 90 days, when there is a certain rise of the demand from direct shipment to U.S., you will have implication for the rest of the routes. If there is a, then for the other shipping routes, you may have see some of the inflationary pressures as well. But for the goods itself, so if eventually the China's shipment to U.S. will continue to get lower, and then there are definitely more of the pressure for, where this a very abundant supply would go to. I think this is also a consideration for many other major economies as well.
Okay, we ran out of time. Sorry, we could do this the whole hour, I think, if we wanted to.
I'll continue it.
Offline.
Yeah, offline. Yeah.
Xiaojia,
I'll see you guys later.
Chief Head Economist at Credit Agricole. Also, our thanks to Shan, Chief China Economist at Goldman Sachs. And subscribers can also turn to the terminal for more on this. T-Live Go is up and running. It's your function where you want to take a look at all the updates, commentary, and analysis from our expert editors after this key economic data has been released. Plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. The other big story we're tracking, HSBC is reorganizing its capital markets and corporate advisory units into a new business as part of a plan to grab a larger market share of the private credit boom that's taking place. Let's bring in Matt Ingram, our Bloomberg Intelligence senior analyst who joins us from Sydney today. Matt, I'm confused. There was a restructure. Is this part of the restructure? What is it? Surely the restructure is nearly done. What does this do?
G'day, David. It does seem like the never-ending story. It's been going now since 2010. To put it in context, they're looking at cutting about $1.5 billion out of the business, and they're only about $300 million of that done. So they need more restructuring. We've talked in the past about the spaghetti network of fiefdoms. This is just breaking down more of those fiefdoms and consolidating some of those key capital markets businesses under one roof so they can service those global clients better, and as you said, particularly in private credit markets.
So what do you think is the opportunity that the bank is actually chasing now, Matt?
It's the private credit markets, absolutely. It's a $1.7 trillion market. Customers are flocking to that market as risk aversion rises, particularly after the Trump shenanigans about a lot recently. HSBC is underrepresented there because of the fact that they don't have a consolidated
I think we're having some audio issues with your mic. We'll try to get back to you in a bit once we reestablish that. But that was our Bloomberg Intelligence senior analyst, Matt Ingram there. So talking about, this is close to the restructuring in some ways of the bank. But again, as you mentioned, the key opportunity is private credit.
Which is, I think, to some extent, ironic and counterintuitive, because the reason private credit also saw substantial growth was because banks had to sort of take a step back from that part of the, because of regulatory issues and regulatory requirements. They've needed to take a step back from part of their lending, and that's why you had this sort of gap filled with private credit. And now that it's doing well, the banks want a piece of it. Anyway, we can read about that here. But
and you wonder how popular is still private credit? given that public markets have been quite volatile. We talk about how less liquid private markets really are.
Yeah, we heard into a slowdown too.
Yeah, so that's certainly one to watch as well. Anyways, we'll try to get Matt back on if we can. Market checks, though, right now, we're taking a look at what really is the response from this activity data out of China, and you are seeing some weakness coming through for the currency right now. We're back to 721 levels, Dave.
Yeah, the other thing, too, is you might have seen some of the headlines across the last week or so across the Asia-Pacific. So, yeah, you're seeing a rebound in COVID, COVID across many parts of the region. I think you had Thailand, Singapore, Hong Kong, certainly, and you have a lot of news flow here coming through. And as you can see, we're getting the COVID drug and test kit makers, including some of the vaccine makers, are catching a bid on the back of this resurgence in COVID we've seen of late. Rise in infections, let's underscore that point to that extent. Right, there's plenty more ahead here on Bloomberg TV.
In Tokyo, Japanese markets are heading to that lunch break right now, and you are seeing shares slightly lower here on the Nikkei. We are watching the yen very closely, so the dollar drop really reflected with that yen strength. We're appreciating about 0.4% now. We're back to 145 levels here. Goldman Sachs had a pretty interesting note too, raising that topics target as well on improved macro outlook. So that 12-month target level now back to 2900 from the bank. Obviously, we're also dealing with U.S.-Japan trade talks this week as well too, Dave.
Yeah, want to watch as far as the developments are concerned there, and really could give us a further upside given the current headwinds coming through this Monday on risk assets. I think on the back really of the Moody's downgrade we're still feeling the after effects of that coming through from the Friday session. Right, in the previous segment, we just had some technical issues. Matt Ingram still with us, of course, out of Sydney to talk us through. Matt, we were just talking about this HSBC report about this new push that they're looking to do as far as capitalizing on opportunities in the private credit sector. And I think one of the things that you were getting to before the gremlins took over was what is there for HSBC to grab as far as private credit is concerned, given the fact that banks pulled out of this market, hence private credit exists?
Yeah, look, David, it's a good question. It's a massive opportunity, about $1.7 trillion. HSBC is underrepresented, and part of the reason is they haven't got a consolidated global effort there yet. So there's a huge prize for the winner, and HSBC wants a piece of it for sure.
In terms of the trade war, I mean, every time we talk about HSBC, they always say they are a trade bank. So, in terms of the U.S. tariff discussion, what is the likely impact for the bank?
Yeah, this is the funny thing. It's the obvious question to ask. They say not much. A couple of percentage points of revenue is the impact in their base case scenario, according to HSBC. That's rats and mice when you consider how many businesses they've got going on. I guess the trade just shifts from one route to another, and HSBC takes a clip either way. But the impact, pretty small.
All right, Matt, thank you so much for coming back. Matt Ingram there, Bloomberg Intelligence Senior Analyst. We're taking a look when it comes to Thailand GDP numbers that just crossed through here for the first quarter. So beating expectations, rising 3.1% year on year. The estimate was for a 2.9% print here. We'll see how Thailand reacts a little bit later on.
Yeah, just ahead of the median forecast. Yeah, and I think that's still Matt, of course, just...
Still working out the audio issues.
Still coming up set. All right, that's not us in your head. Okay, let's have a look at other major stories that we are tracking at this point in time. So you have former U.S. President Joe Biden has been diagnosed with an aggressive form of prostate cancer that has metastasized to the bone. The cancer is characterized by a Gleason score of 9, indicating that it is likely to grow and spread quickly. But Biden's spokesperson added that the cancer is hormone sensitive and may respond to hormone therapy, and treatment options are being looked into. The cancer news comes as Biden and Democrats have been dogged by revelations in a new book about the former president's declining mental faculties during his time in office and efforts to gloss them over. Now, South Korea the leading presidential candidate there, Lee Jae-myung, says that he sees no need to rush for an early trade deal with the U.S. During the first head-to-head television debate with his rivals on Sunday, Lee said the U.S. doesn't necessarily have an overwhelmingly upper hand in trade negotiations. He also criticized the interim government for what he described as their hasty engagement with the Trump administration. Now, the centrist mayor of Bucharest has won Romania's presidential runoff. Independent candidate Nicur Serdan secured more than 54% of the vote, defeating far-right candidate George Simeon. Now, the victory was helped by Romania's highest voter turnout in a quarter century and marked a check on the rise of right-wing parties in Europe. We'll have plenty more ahead. This is The China Show.
Well, back to our coverage of the BNP Paribas Global Electric Vehicle and Mobility Conference here in the city. Our next guest comes from a company that makes unmanned passenger aircraft for urban areas. It's part of the low-altitude economy that mainland China and Hong Kong have pledged to support. So we're talking about flying taxis, autonomous flying objects and the like. Joining us exclusively now is Conor Yang, CFO at EHang. Conor, it's always great to have you back on the program. Can you tell us how the regulatory framework is looking like for you and how you're doing business these days, in particular when it comes to the status of your aircraft certification? What's the update there when it comes to Europe and the U.S. now?
We have obtained the world's first operator certificate late March together with our client. So after that, the visitor we can start to sell the ticket commercialized to the general public. And globally, we have expanded to like Middle East, South America, Caribbean countries, as well as the Southeast Asia. For the U.S., currently we don't have a planned selling product over there. But globally, there are strong interest in our product, and of course, domestic as well. Yeah.
Conor, David here. Just to follow up on that, I believe you're, and correct me if I'm wrong, are you in 16 cities right now outside of China, and are you looking to increase that number? And when can, again to your point, when can we start to expect the company to derive revenues from its business outside of mainland China?
Well, last year we have grew our revenue over 300% compared with 2023. We have sold 216 units of our eVTOL, the aircraft, mainly in China as well as some sold into overseas. And in terms of in China, for example, that currently there are over close to 60 cities in China has laid down the low altitude economy as their national government work for the next few years. So we'll expect to see a strong demand of our products in the next few years. Globally, as I mentioned earlier, we are in the Middle East, we are in Caribbean countries, South America, and Southeast Asia. These countries in those areas has a strong interest in us. In U.S. and in Europe, there are special regulations for the type of certificate approval. So in terms of pace, we'll do globally outside of these two regions first.
Is there any sort of risk in expanding in some of these markets, Conor? I have to ask you about how are you addressing some of the regulatory hurdles in some of the international markets that you're trying to get into?
Right. The most important certificate is the type certificate that we have obtained from Civil Aviation Administration of China back in 2013, October. So globally, that we are selling our product to those countries or areas that I just mentioned, and they can use that for like a trial purpose. But if they want to start a massive operation commercially using our product, they still need to obtain so-called VTC. It's a validation of our type certificate because mostly those countries, they do not produce aircraft. So what they need to do is to have like bilateral agreements with China's Civil Aviation Authority to get more information and get the approval process. on this process would be a lot shorter than officially getting a Thai certificate. But some countries, like in Thailand, for example, they're more flexible. Even before they get in VTC, they will put in some area for like a sandbox within this confined sandbox area. If we meet certain requirements, we can start to operate commercially. So there's various countries has a different approach. But I think longer term, we'll get there. Because globally, we do see that this eVTOL is a global industry. China, I believe, is the largest country, largest market in this area. But globally, there's also very strong interest.
Conor, I need to ask you, the product on display right behind you, I think that's EH216S eVTOL. And speaking of aviation authorities in China, you recently got certification to operate. If you could just clarify what exactly are you now allowed to do, and what does that mean for your domestic business?
Right. There, as a manufacturer, like EHang, that we have obtained type certificate, we have obtained the production certificate, as well as the standard airworthiness certificate. So with these three certificates will enable us to sell to our customers that, and also our customer can use the EH216 for commercial purpose. And our client purchase our eVTOL, they want to sell tickets, they want to provide to the public, they need to obtain so-called operator certificate. That the CAC in China has also granted the OC, the operator certificate, to one of our clients in Hefei, called Hefei Heyi, as well as to EHang ourselves. So once the client get this OC, you can think about that as like a regional airline company on the eVTOL sector. They can, after internal trial, then CAC will start to allow those OC owners to operate to the public step by step.
Conor, just to ask about, and I know you guys are reporting results very soon, so you can't get into detail, but just to understand, if you're, I think the last time that we had a conversation, you said you were on track for 900 million in revenues this year. Are you still on track broadly for that? And are there any concerns that have been brought up because of your concentration in terms of the small number of customers that you guys have, which can be a good thing or it could be a bad thing as well, Conor?
Yes, there are over about 15,000 scenic area with A-rated or above, and many of those are operated by the various local government. That's why the first step will be in aerial sightseeing. In China, even we adopt a 15% penetration rate on this 15,000 aerial areas, and each area can purchase like about 10 eVTOL. That will be over 20,000 units of eVTOL in demand in the long term. So that's a very big market. And of course, it's a human carry and pilotless. It's a brand new industry, and the first type of its kind in China as well as in the world. Therefore, safety is the utmost important thing for us as well as for the government. Yeah, if you can compare like this industry versus electric car 10 years ago, versus 10 years after, you can see a huge potential. eVTOL is really will create a brand new way of transportation for human beings, utilize the low altitude space. So we are very confident in the longer term, the big picture, the big market, especially with the huge population and government support in the regulatory environment. And product-wise, we are currently the leading in China as well as in the world on the commercialized front. Yeah.
Conor, I was looking at you, our last question. We've seen a pickup in, at least an interest in a lot of U.S.-listed firms looking to IPO somewhere else, given just the tensions that we're seeing between the U.S. and China right now. For EHang, do you share those kind of concerns, and do you have any plans for a second listing?
Yeah, we were listed in NASDAQ back in 2019, December. So currently, other than listed in NASDAQ, we are actively exploring different alternatives for listing outside of the United States.
Conor, if I could push you on that, you're actively exploring options. If you could maybe give us a short list of the places that you're considering.
Well, as most of the Chinese ADR, right? There are definitely very clear answer on that. Yeah, definitely we'll pick the best one for us.
Okay, yeah. Let's read between the lines, Conor, and we'll wait for your confirmation later on. Thank you so much for the time, Conor Yang there, CFO of EHang, joining us from the BNP Paribas Global EV and Mobility Conference in Hong Kong. Right, coming up, we'll be speaking with Hero Esports, billed as the largest esports firm in the Asia Pacific. It's the Asian Championship League final this week. Its CEO joins us next. This is Bloomberg. Welcome back. Shanghai headquartered Hero, formerly known as VSPO here, bills itself as the biggest esports company in the Asia Pacific. There was a massive event, of course, in Shanghai over the weekend. The Asians Champions League and the finals there. Local media said thousands of players descended into the city. I would imagine multiples more tuned in live and virtually to the big events there over the weekend. Joining us now exclusively is Danny Tang, co-founder and CEO at Hero Esports. Danny, good morning, and thank you for joining us. So give us some numbers. I know it was a fairly big and momentous event over the weekend. How many people tuned in live or virtually?
Yes, good morning, good to be here. So we just concluded the first edition of our Hero Esports Asia Champions League, which is Asia's first massive multi-title esports tournament. We had about 9 different titles across 3 different venues in Shanghai. And I'd say we're still tallying up the ticketing numbers, but we're seeing around 60 million viewers who tuned in to watch the events from across the world.
Wow. That's amazing. And
wow.
This really helps in terms of your global reach as well. It's in the news, though. Hero Esports recently secured a major international investment. I think it was around $200 million from Savvy Games Group from Saudi Arabia. How is this going to help you in terms of ramping up growth now?
Yes. I know we've talked about esports being very interesting. We've seen those massive numbers. According to a government report, we have 490 million esports viewers in China alone. So esports is developing very fast. But if we think about the ambition of what it could be, when Dino and I, my co-founder and I, founded the company in 2016, we always believed that esports is going to be the future of sports. So if you compare it to where it is now, to where it could be in the future, we're still in the very beginning. So in that sense, we're really, really happy to join hands with strategic investors and also partners around the world. And Savvy Games Group has been a great investor and great partner in this effort. And we've seen Saudi Arabia launching a lot of its gaming and esports initiative. We've seen that it is hosting the 2nd edition of Esports World Cup this year in Riyadh. So a lot of very exciting things coming out from market. And so that's why we're very excited to be invested by Savvy Games Group and to be part of this journey together.
Yeah, and Danny, I mean, we're looking ahead to the World Cup, as you point out, of course, taking place in just a few weeks, if you think about it. Do we know who from the weekend's events then made it? Because I understand there is a read-through there from results on the weekend to who participates then in that upcoming World Cup. Just give us some color there.
Yes. Like I said, we have 9 titles, and 7 of the 9 titles, the winners of those titles are proceeding directly to Esports World Cup, representing the games in this region. So we're super excited. We're seeing some of the younger teams ascending up. For example, in Honor of Kings, TTG actually won, and they are going to join AG on the stage of Esports World Cup this year. Stay tuned. It's happening in July, and it'll run all the way from July to August. And we're very, very excited.
Yeah, the Middle East has so much interest now, even in esports, it seems, Danny. I'm just wondering, what in terms of regions, what are sort of some of the regions or initiatives that you're focusing on now?
The way we think about it, esports is global in nature, in a way that it actually breaks some of the physical boundaries that we have. It brings gamers around the world together. So when we think about esports, it really should be happening in all different parts of the world. I mean, China has grown very fast. I mean, we've taken a little bit more expedited speed when it comes to mobile gaming and mobile esports. That's why we're seeing esports being more like part of the pop culture and part of the mainstream conversation now, when it's compared to other parts of the market. But there are other markets, like you mentioned, Middle East, who share similar demographics and excitement around this industry. And we're seeing markets like, the United States coming up as well. So, but ultimately, if you ask me that question again 10 years from now, the answer would be, well, where in the world is not a mainstream sport, right? It will be global.
Oh, yeah. Well, 10 years from now, it's going to be AI asking the question if we're if we're lucky in 3 years. Danny, so it seems that growth is explosive and clear. If you could just maybe tangibly talk to us about revenue and monetization trends that you're seeing and how that improves moving forward with the growth that you're seeing.
We are a private company, so I probably won't be able to talk about our own numbers. But if you look at the industry as a whole, it's a $100 billion industry with the gaming and esports industry. And it's only going to grow because gaming has become part of our social fabric. It's become how our generation, our future generations interact with each other, how they compete with each other. So a lot of business models could come out from this demographic shift, this macro trend. Now, Hero Esports, take us as an example. We have 3 major business lines. We have tournament operations. This is where we organize, we operate, we broadcast, we live stream the amazing esports experiences that you experience offline, and then we take that experience online and broadcast it to hundreds of millions of fans. We also have commercializations, where just like traditional sports, brands and people in consumer retail want to make themselves known and to connect with the younger audience that watch esports. This is an age group from anywhere from 18, 16-year-olds to 40, 50-year-olds, where the average is probably around 26, 27, and they're actually quite gender balanced. We're looking at audiences that you might be surprised, 50%, roughly 50% of the audience who are viewing esports contents are actually female. If you look at the offline attendance, is actually probably even more than 50% of the audiences attending events offline are female. So brands want to connect to this demographic. They want to connect to this future consumers. So we have that as a business model. Of course, we also have the KOLs, the influencers that broadcast and live stream in various platforms, and they produce contents that are maybe not the exact highest level of competition, but they speak directly to the day-to-day consumers. It's companion, they game together, they share a laugh together. So we're going to see a lot of interesting plays coming out of that as well, and that's one of our 3 major business lines as well.
Danny, it's great to have you. Danny Tang there, co-founder and CEO of Hero Esports, joining us from Shanghai, talking about the latest trends in the esports industry. And let's take it back to the markets, obviously, and recap some of the data that we got from China for April. So we did see that tariffs did hit, in particular when it comes to the industrial output, retail sales as well. But the good news is that, at least industrial output was better than expected, although it did slow down. Retail sales, though, that was quite the miss there. Yeah, and I think the point that our roundtable early on from Goldman Sachs and Credit Agricole were making, right? So industrial output is a function of exports, which continues to keep the economy and really drive growth in the economy, and certainly retail sales is wanting there. So I guess it just goes to show it's same steady as she goes, but same growth drivers still going into this very uncertain time. Yep, and HSI is looking like this right now. We are coming off the lows, but we're still seeing they're down about 1/3 of 1%, and certainly we're watching what goes on with the currency as well. We're still holding around 721 levels as we speak. That is it for us here at the China Show. Insight with Heslina Ahmed is next.